The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.
And before we say goodbye, let us reach out beyond Georgia and evaluate a more global trend, that is gold and inflation. You may read a very interesting piece by our thought leader with international work experience and fluency in several languages, including Japanese, MICHAEL Preiss, who has many different roles, including CIO, investment advisor, asset management strategist, and financial columnist, and specializing in global macro, asset allocation, investment advisory, fund management, investment research, wealth management, strategic and tactical asset allocation, trading and investing, emerging and frontier markets, technical analysis. Conventional wisdom says that gold is the anti-dollar. That is, whenever the greenback is strong, gold is weak, and vice versa. Gold prices react inversely to US dollar real yields, but gold is not about inflation on its own, and it's not about interest rates on its own, but it's about the relationship between the two. This is just one excerpt from a very interesting piece on BMG English. For more, here's a very interesting talk of my team, Georgi Sakadze, Georgi Tolordava, and Luca Legveishvili. Let me thank guys for working hard for the checkpoints.
So, Michael, thank you so much for your time again. Always pleasure to host you through the Forbes Talks on our BMG platform. What are your general thoughts about today's stock market and the global economy? What is happening around? It's been a while. We've been talking about this, and it's a difficult time for the global economy as well.
Yes, I mean, look, I think it comes down to two things. It comes down to this question of valuations. What valuation is a fair valuation in this new changed global world order? And also, more importantly, from a central bank perspective, the question that many economists and also investors have: can the Federal Reserve Bank in the United States or even the ECB, can they anchor inflation expectations? Because you see, unfortunately, as you might have seen in some less developed countries, you have a true inflation crisis. For example, if you look at the small island country of Sri Lanka, the official name of the country is called the Socialist Democratic Republic of Sri Lanka, right? And it's socialist, but look, in a socialist country, food prices were rising 80%. And 80% food inflation is not necessarily socialist. And of course, it led to a revolution, right? And the country is now almost bankrupt and people in the streets, right? That happens when you cannot basically limit inflation expectations. And that's really the challenge as well for the Federal Reserve Bank. Because you see, the world reserve currency, the United States dollar, having 9% inflation, it's not supposed to be like this.
Okay. At the same time, while we move to the Fed policy, in general, what do you think, what factors led that the economy, as you mentioned, is in just another business cycle slump? Or as we talked just in the beginning of our conversation, that it's not always going to be the global economy is growing or markets are up. But at the same time, we do have another business cycle slump and not an economy leading into a recession. Please.
Yes, look, I think in my opinion, it comes down to this belief that anyways, even before COVID, we were very late in the business cycle. And then basically you had at the end of the business cycle, or usually the length of the business cycle, right? You can expand it for a long, long time, but then again, you had an extra event that nobody could foresee. That was the COVID crisis. And then, of course, after COVID, to make things worse, the unfortunate war in the Ukraine that further led to now currently a global food inflation problem as well. And that was really potentially the tipping point.
Mr. Preiss, do you think it is likely that predicted interest rate spikes around the world will result in global economic downturn or possibly a recession?
Yeah, look, I mean, that is still, the verdict is still out on this. But I think what it has clearly led to is it has impacted so-called long duration assets. So basically, this is why, again, the stock market has moved, again, from a growth perspective, more into value. And that particularly as an investment destination, I think also private equity could be at risk because there was, again, too much money chasing too few good deals.
At the same time, Michael, if I may add, we do have also, you mentioned about Federal Reserve or ECB at the same time. What do you think? would they allow such a spike to occur?
Yeah, look, I mean, ultimately it's about what's best for the country. And again, look, I mean, to some extent you have to have, like what the Americans say, short-term pain for long-term gain. And maybe the issue was that there was always this belief that more QE would be the solution. But again, I suppose too much QE has led to previously an asset price inflation. That's why, unfortunately, we were going into this COVID crisis and also into the war in the Ukraine with very high valuations.
Yeah. Okay, Luca, it's your turn. Yeah. Thank you, Mike. Yeah.
So, Mr. Preiss, you mentioned in your article that to see a bull market in gold, we need a negative real interest rates and reduction in U.S. trade deficit. However, the only significant time we saw both factors occurring together in our recent history was in 1974 and during the financial crisis in 2007. Indeed, the financial crisis did lead to a large increase in the price of the gold in the following years, making it a bull market. By your definition, was this the only case of the gold bull market?
Yeah, look, I mean, I think it's interesting that you mentioned the year 1974, right? I mean, don't forget that 1974 was getting into the end period of the Vietnam War, right? And that again was a sort of a conflict of ideologies between the Western world led by the United States and basically by the old communist Soviet Union bloc, right? What is interesting today is that you seem to have a replay of that in the sense that now you have a proxy war in the Ukraine between the Russian Federation supported by China against the Western world. And again, these sort of things potentially could long-term lead to a re-evaluation of the United States dollar as a reserve currency. I think that's also fundamentally the geopolitical driver for gold prices. Again, it's potentially about system change. I mean, in more modern history, you might look at Bitcoin as a potentially an alternative to the US dollar or gold. But I think the fact that Bitcoin has gone from less than $1,000 to $60,000 until the recent past is a sign that yes, potentially we are going into a new world order.
Okay, so what leads you to think that the price of gold would increase rather than further decrease? After all, you mentioned that the investors' momentum has faded and the investors are turning to US dollar as a result of the events in Europe.
Yeah, look, I think it comes down to the belief and really the long-tested value of gold, that your gold is nobody else's liability. And it's also, again, in that sense, you have no counterparty risk on gold. And again, look, in this day and age, again, if we see a real recession, you might actually have more casualties, for example, now in the sovereign space, we're already seeing sovereign countries like Sri Lanka going into default. So again, default risk potentially is rising. And in an environment where global recession and default risk is rising, the only asset that has no counterparty risk in this case is gold. As the founder of America's largest bank, John Pierpont Morgan, JP Morgan, stated, gold is money, everything else is credit. And potentially credit is still mispriced. And that is really also the debate in the stock market. Is the stock market correctly priced at around the current levels of 3,900 in the S&P? Potentially the fair value in the S&P is closer to 3,200 on the S&P 500.
Thank you, Michael. Next question from Georgi. Please, Georgi.
In times of high rates, investors usually choose to invest in US dollar, and in times of low rates, they tend to choose the stock market. In your opinion, when is the optimal time to invest in gold?
I mean, on a tactical basis, I think it is even today the optimal time. But ultimately, don't forget, the reason why gold doesn't pay you an interest rate is because you don't have any counterparty risk. Look, I mean, there was a time when the United States dollar still paid a meaningful interest rate before QE brought rates to zero and before even the United States went the way of Japan. So this idea of a zero interest rate world, right? I mean, when I grew up, when I was potentially your age, I still remember most countries in the world still had a real interest rate. Recently, people have forgotten what an interest rate is. Interest rates in America also went to zero, don't forget. But I think what's also important with regards to your question is that in that sense, the markets have changed. For example, the Japanese yen, which for many years was a zero yielding currency, and it was a funding currency for investments around the world. Even though Japan is highly indebted, the currency was very strong. This time around, and this is why potentially this cycle is different, the Japanese currency has actually collapsed against the US dollar. Historically, during times of crisis, the Japanese currency behaved like the Swiss franc. The Japanese currency was considered a safe haven currency. Now, this time around, Japan's currency has actually collapsed. But again, gold in Japanese yen has strongly outperformed. So also for global investors, it's important to not just look at gold versus the United States dollar, but gold versus their own currency.
Yes. Can we consider gold as a hedge against inflation, and would you recommend it?
Yes, I think the honest answer, it depends on time frames, because short term, gold is under a lot of headwinds because of the belief that if the Fed would raise rates aggressively, gold becomes on a short-term basis much less attractive, and hence it leads to selling pressure in the price of gold. However, longer term, gold, like real estate and even equities, are an inflation hedge. So I think this is really the debate in the market. It's about the time frame.
Also, one question about inflation hedges. Can we consider any other alternative assets as a hedge against inflation? For example, as you mentioned, cryptocurrencies, for example, Bitcoin or Ethereum?
Yes, but having said that, and this is potentially the disclaimer, Bitcoin and cryptocurrencies is still very much a philosophical and an emotional debate, significantly. I think it is not so much about inflation, it's more from a market dynamics point of view, it was about market liquidity. Because that's usually the concern. If the US dollar rises too rapidly, it leads to a liquidity crisis in the world. And that is really the risk of a very strong dollar. I mean, the dollar so far, so here has really been the king of the foreign exchange market. And too strong a dollar potentially could lead to more challenges around the world in financial markets. And that's also, I think, what the Fed is concerned about.
Absolutely, yes.
So following up that question, in such troubling times where, as you mentioned, the gold is dropping in value now and the US dollar is so strong, we also see record-breaking inflations throughout the world. But what store of value would you recommend to investors as of today?
And look, the old market adages, again, the only free lunch in financial markets is diversification. And I still think, especially at this moment in time, it's important to have a well-diversified portfolio. And again, the true question is, and this is also, I think, why we're potentially at the end of the cycle in this current sort of historical point of view, because you see, if somebody asks you a question, what is safe money today? It is very difficult to answer that. Because you see, people have said, and even Mr. Putin, president of the Russian Federation, he said, look, the dollar was supposed to be a safe currency, but then they can still steal your dollars if you're against the United States. And see, that's again also one of the reasons why I think, I mean, as a European investor, that is, right? The belief that the dollar is risk-free is not really true. If you're on the wrong side of the American government, you also have not necessarily much recourse. And this is, again, what this unfortunate Ukraine crisis is showing us. It goes beyond just financial market risk. It also goes into so-called legal risk. And that's usually the case. When an economy goes into a recession, that's when people really understand what is legal risk.
At the same time, taking into consideration, Michael, everything happening around, do you think there are any kind of prognosis or predictions in regards to the bear market when it might end? I mean, the current bear market.
Yeah, I think with regards to United States equities, I think it comes down to this belief of earnings recession. Can we see a meaningful contraction in EPS and earnings per share, or is this just a dip? And I think here the verdict is still out. And on a short-term basis, I think we could potentially even see a tradable bounce in the stock market. I think what investors should always remember that bear market rallies can be very powerful. But longer term, potentially, yes, we can have more equity market weakness. Because again, as I said previously, the challenge for the policymakers was that we entered this crisis with very high valuations. And historically, the stock market has been very expensive going into COVID and then also going into the Ukraine war. So how low the market can go, nobody knows.
Michael, thank you so much for joining us for this
Thank you.
briefing, and thank you so much. Always be so kind and responsive. Thank you so much again, and looking forward to seeing you soon in Georgia
pleasure.
physically.
Thank you, gentlemen. Thank you.
Thank you.
Thank you.
The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.